Hello traders, Gary Wagner here for Trending Markets. Just about 10:45 in Honolulu, 4:45 in New York. Markets have closed for the day and the markets have spoken. Equities up substantially. Dow Jones Industrial Average trading up over 300 points, almost a 2% gain on the day, closing near the highs at 16,776. The Standard & Poor's also showing a very, very nice gain, about 1.66% higher at 1975 and change. Of course, if you recall from Friday's show, we talked about the fact that we identified a pattern in the market simply called a three-river morning star. We certainly saw confirmation of that the following day. However, it wasn't a very, very strong candle when we simply look at the body size of the candle, meaning where the market closed and where the market opened at, it was still a pretty tight range. On Friday, of course, we had a tremendous day in which many are claiming a key reversal. And the reason they're claiming the key reversal is when you consider the low that we saw on Friday, which is roughly at around 1880, just above that point. And then we consider that the market has hit a high of 1980 today. You can see that between the low on Friday and the high today, these 2 days of trading, we have seen it gain roughly 100 points in terms of trading activity. So how do these last couple of trading days fit into the big picture? And to take a look at that, we still have our daily chart up. This, of course, is the Standard & Poor's 500, and we'll go ahead and compress this chart so you can see where we are looking at our different fib levels. But in essence, what we have is one fib retracement from these record tops up at around 21.25, a little bit above that, down to this low that we got back towards the end of August into September, in which we saw the market dramatically decline down to just above 1825. We are just shy right now of a 50% retracement mark, meaning getting back approximately 50% of the drawdowns that we witnessed since the high of the market to the low of the market. That comes in at around 1983. We also see a series of tops that are right up in here, and of course this shooting star that really illustrated or capped off the last little run that we had from the bottom of this market up to the top before it started retracing again. So now we do have a series of higher lows, which of course is extremely bullish, and my sense is that we will now see a higher high, which means that we will see it not only track above 1983, but probably track above 2000, because those are the record. These are these tops that we got here, also a 38% retracement. Now, we talked about the fact on Friday and all through last week that we would look for certain characteristics in the market to begin to layer in long positions, and traders, we're certainly getting that. We are certainly going to be looking and entering this market from the long side as early as tomorrow. It is my current sense that we're probably going to see a sustained rally in the market and a move to higher prices. Now, in terms of the other markets that we have been following on Trending Markets and looking to take a particular trade on, oil is the other one. And as you know, I've been looking for some signs that we have seen some bottom activity in oil, and I am looking for that market to move higher. Now, we did see the market move higher today, up roughly 73 cents, trading at 46.25 per barrel, up about 1.5% on the day. But the real tell of the tape, so to speak, and we've talked about this for many days, is the fact that what we have noted about this market is that after periods of large price spikes such as we got here when the market traded from roughly 43 per barrel up to 60, that was followed by a fairly sizable or long period of consolidation. The consolidation is most evident when we look at these weekly charts, because what you get is a series of dojis, or points in time in which the market opens and closes roughly at the same point by the end of the week, meaning closing on Monday, closing on Friday, very close to where it opened on Monday. Now, we are getting a similar kind of a sense or feel for the market right now, although we have seen this market slowly ascend higher. Right now, I am pegging resistance in the market just below 48 at 47.83. And as I have said, until this market breaks above 48 or below 44, my sense is it's still in a consolidated trading range, just as when we saw the market here hit these tops at around 60. But when you look at the lows that came in, they came in much below 60, roughly at 57, 58. So we had this basic range in which the market traded. Even though it was consolidating, it did have a range during the week. I think we're seeing the same thing. However, we are seeing this market having a series of higher lows on a weekly basis. Now, of course, today is much too early to tell because it's the first day of the week. But my sense is if we do break above 47.83, that traders is extremely bullish and could indicate a potential breakout at least to $52 per barrel, which is our 50% retracement from this most recent trading range, with 60 at the top and roughly 38 at the bottom. I'm most excited about the Standard & Poor's. We'll talk about some of those strategies that we will implement to enter that market beginning tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Tuesday for another Trending Markets update and review. Bye-bye.